Please can I introduce our panelists?
Good afternoon, everyone. My name is Mike Siegel. I am a partner at 500 FinTech, which is an early-stage venture capital fund based in Silicon Valley, but we invest globally, and I'm representing Silicon Valley.
Sunny?
Thanks. Good afternoon, everyone. My name is Sunny Parikh. I'm here from the Partnership Fund for New York City. We're a $150 million VC fund focused on investing in New York City companies. It was founded by Henry Kravis about 20 years ago. And one of the initiatives that the fund has started in partnership with Accenture is the FinTech Innovation Lab. So I look forward to sharing more about that today in our discussion.
Good afternoon. I'm Jorge Ortiz, founding president of FinTech Mexico. We are a non-for-profit organization created to structure the fintech market in the country.
Hi, everyone. I'm Bruno Diniz from the Brazilian Startup Association at the FinTech Committee, and I'm here representing Brazil. We also are a non-profit organization as well.
If you'd like to start, tell us a bit more about your hub and what you've been up to over the last few years.
Sure. The Brazilian hub is pretty new. The activity in Brazil, I think it started back in 2014, at the middle of 2014, and increased a lot. We have now about 240 different fintechs in the country. And pretty much 60% of them were created in the last 2 and 3 years. So it's a pretty recent market. We're doing very well in initiatives at payments, the payments space, and a lot of corporate collaborations are happening as well. So it's a pretty interesting space. Along with Mexico, we are the top 2 countries in the region that are doing well in fintech. We have 240. Mexico got something almost like that, numbers of initiatives. And we got a huge gap on financial inclusion. I think it's a common problem in Latin America. So in Brazil, it's a very challenging topic, and we got a lot of things to do in this space as well.
Well, FinTech Mexico is, as I mentioned, is an organization. It's a non-for-profit organization created in 2015, a little bit over 2 years. It was created when we saw how the ecosystem, the fintech ecosystem, was evolving in Mexico. So we gathered all the most of the entrepreneurs in the country just to create this association. So it's an association created by the entrepreneurs to look for common goals. So we created, in numbers, we're, as Dino just mentioned, we're almost the same as in Brazil, around 240 initiatives, fintech initiatives, in all the stages, from incubation to quite large companies or medium-sized fintech companies. Also, one of the problems in Mexico is financial inclusion. It's sad to say this, but I say it with a smile. We are the second lowest country in Latin America regarding financial inclusion. So the average in Latin America is 51% of adults. We have around 40%. So there is a lot of need to go into those places. So 2 years ago, we created FinTech Mexico, and we work in 5 committees. So we work in regulation, education, cybersecurity, research, and research, and what's the other one? Technology. So we are growing, and one of the main achievements is that last week, the president of Mexico presented to the Congress the FinTech law. So we were the organization who asked for that law, and we have been working with the government for 2 years now. And so now we have the law in the Congress. We have to work towards approving the law, but Mexico is going forward.
Great, we can talk a bit more about that later. Sunny, what's going on in New York?
Sure. So New York, compared to Brazil and Mexico, has been a little more developed, given it's been the concentration of financial institutions there, and the lab that we started in 2010, a few years after the financial crisis. It was started with the goal of bringing the financial institutions and the startup ecosystem together. If you're an enterprise tech entrepreneur, one of the toughest things you have fundraising is tough, but the toughest part is really navigating large financial institutions as customers and understanding what your product is meant to do, what the feedback is. If you want to talk to the head of compliance or the head of data and understand where your technology can fit in there, it takes a long time. And our goal when we started the lab with 10 financial institutions was to shorten that time from 18 months to maybe a few months and really kind of help fast track that product development process and help those companies scale. And the progress we've made has been pretty strong, and we look forward to continue making that. We started with 10 financial institutions in 2010. We have 40 financial institutions now. We've had 47 companies go through the lab. Companies have raised over $500 million since they've graduated. Companies like Digital Asset, Digital Reasoning, Enigma, Casisto, and CB Insights, which a lot of you probably read is to understand the fintech ecosystem. So it's been great, and I think one of the new things you talked about the next 5 years, as we look at the hub in New York, we have a strong concentration of financial institutions. We've increasingly seen insurance companies come to the table more. So today, actually, we launched an insurance tech track as part of the FinTech Innovation Lab, because I think we're seeing more and more entrepreneurs build insurance-specific solutions and insurance companies looking to do that. We've seen regulators engage more, and we'll talk a little bit more about that as well. So I think in the next couple of years, you'll see collaboration across a few different parties and across a few different hubs, which is exciting for us.
And Mike, in San Francisco and Silicon Valley?
Yeah, so we're generally, as Silicon Valley, we're a bit hard-pressed to call ourselves a fintech hub, right? We've got 80 years of experience in scaling innovation. And I think in terms of the financial services space, we tend a little bit towards more consumer-oriented or infrastructure-oriented as opposed to enterprise-oriented. That said, my organization, 500 Startups, has been investing in fintech. Part of our founders come out of the PayPal mafia, so we've been the most active early-stage fintech investor in the world since 2012. We've got about 225 portfolio companies in 26 countries. On the back of that, what we've done with 500 Startups is recognize that an awful lot of institutions like yours both have facilities in Silicon Valley and continue to come to Silicon Valley as a place to learn how is the process of innovation done. And so what we've done at 500 is to try and engage more banks and insurers. We have about 60, 65 today, where we're trying to connect them up, not just with our portfolio companies, but all the richness that Silicon Valley has, not to stay there, but rather to bring back to wherever they're from.
One of the key things when it comes to fintech hubs is about collaboration and partnerships and moving past the MOUs and the hype and the marketing and to the tangible things that are happening. So it'd be great to get your point of view on the actual examples of partnerships and collaborations that you think have been key in your regions.
Yeah, there's one that was launched this year called Alianza Iberoamericana. It's like an alliance of the countries from Spain, Portugal, and some countries from Latin America. So we are collaborating in a way to come together as a bloc and try to benchmark the different regulatory aspects we have in the region, because we have some common issues, right? We have just like the financial inclusion is a very common issue of all of the countries, and we can share a lot of experience and best practices on that. I think we're doing well. We just collaborate with on equity crowdfunding, right? Mm-hmm. Jorge can say a little bit more about.
Yeah, that is a good example of collaboration, because we are really doing things like FinTech Iberoamerica was launched in May in Montevideo, Uruguay, and it comprehends 20 countries. But in the launch, we brought some, for instance, regulators from our country, so we kind of sat them together to start talking about how can they make kind of to take the same spirit into the laws of each country, so that it will be easier, for instance, for a Colombian company, if they're operating in crowdfunding in Colombia and then they want to go to Chile or to Mexico, just to be really easy for them to open a crowdfunding company in those other countries, since the law should be the same or almost the same with perhaps some different aspects, but the spirit is interesting what they're taking. So they are really collaborating. They got together now at the beginning of October again in Dominican Republic to continue those talks. So there is a good example of collaboration between the region, right? The Latin region or the Hispanic region.
How has the public sector and the private sector actually supported your hubs, or have they not, and you've just gone and done it all on your own?
In New York, it's a unique place for fintech because we have, as I mentioned earlier, such a high concentration of financial institutions. And so the ecosystem and kind of the fintech sector there has grown organically as a result of the need for innovation from large financial services companies. And business models, as a result, have grown out of people that have come out of large financial service firms realizing an issue, building out a fintech company. So there hasn't been as much of a public-private partnership or a need for it in New York City, but you've seen kind of internal large organizations build out, like Barclays has built out Barclays Rise, Deutsche Bank Labs. All the large organizations, large financial institutions have built out internal arms of innovation in some way, shape, or form, which is a lot different than when we started in 2010, when kind of the CTO was the one in charge of innovation, and now you've seen more and more of an appreciation for the sector, and so that's naturally kind of grown, but it's grown more in a very commercial, with a scalable business model in mind.
So relative to Silicon Valley, the regulators, to the degree they're able to get involved and talk to the companies and try and understand, and I give them credit for at least trying, but we have so many regulators in the US, I'm not going to say that there's anything consistent. What I will note, though, is two things which I find interesting. The first one being, we've actually seen a fair number of startups started by former regulators going into RegTech. And by the way, I just love those entrepreneurs because they know what's going on. The second thing is, as we go reach out around the world, regulators elsewhere, take MAS or the FCA, have been a real partner to us in trying to get us involved with their local companies because, again, we invest globally. And it's truly refreshing to see often the regulator be one of the most forward-acting participants in the economy in terms of helping this innovation along.
In defense of the regulators, I think we've seen the regulators engage more, and it's it's a very complicated system here in the U.S. So I think in the next few years you'll see. We hosted an event last month, as I alluded to earlier, with the OCC, the CFPB, and the Fed, and the level of engagement and the openness that you're seeing with them and the startup ecosystem is pretty impressive. And I think we talk about empathy. There needs to be probably some level of regulator empathy because it's a very complicated structure that they're living under as well, too.
So. Sure.
Where does the talent come from? Can any of the bankers sitting in this room be a protection fintech founder? In London, that is what we found, that the average fintech founder actually has about 10 to 15 years worth of experience in their specific domain, and then they actually come to help solve the problem or build a team around that as well. So there's lots of strong domain knowledge. So who wants to start?
Yeah, that's kind of profile in Brazil as well. In São Paulo, for example, is the major city we got there with all the financial activity going there. We have the examples of many guys leaving the jobs in the banks, either because of the recession, because of the crisis, or either because they really are going to want to catch this fintech moment that we're having, and starting their own companies. I think it's also a good time because in Brazil right now we're having many different corporate programs, acceleration programs by different financial institutions that can help those entrepreneurs as well in these early days. So this is happening a lot, and the average is just like that. The guys are in their 40s, the guys that really understand very well some kind of subject or some kind of challenge inside their financial institutions, and they really come and try to pitch new stuff, new projects, not only the conventional ones, but some ones that are really important inside the organization, inside banks, something that can be resolved.
In New York, if you think about all the financial institutions there, the entrepreneurs that are innovating in fintech have come with deep domain expertise, have been in compliance or in security at large institutions, understanding the nuances. So you have strong domain experts as founders. And as you scale, there's a few programs at NYU, Columbia that are helping build some knowledge base and thought leadership around that. So that's been really great. I think anytime when you try to really scale in a specific sector in technology, there's always the challenge of finding the right technical talent, and I'm sure that's the challenge for a lot of the hubs. So it's just a matter of supply meeting demand, and I think it's slowly happening. But quality tech talent at the right price is always a challenge, if you ask any founder. So
As investors,
Frothy.
meaning.
Well, there are some, and I'm sure we all know them. There are folks who have been investing in fintech for a long time, and understand the rigors and understand what it takes to grow a fintech company that others don't. And then there's a lot of other venture money out there that really doesn't understand, and it ultimately bids up the prices for the good fintech companies. And as an investor, I'd rather buy cheap.
In Mexico, the VC industry is growing itself. So there has been quite support from the government to create new VC funds. So we have seen an increase on fund managers just raising capital. And I would say that perhaps the largest portion of investments from those new VC funds is going into fintech. So they're really supporting the ecosystem. I mean, it's not such a large number, but last year we ended up with over 100 million invested by VC funds, Mexican VC funds, into the fintech sector in Mexico, and we expect this year to be larger, and also to attract foreign capital to be invested into the fintech sector. So the VC industry is growing, and fintech is positioned as the selected or the preferred sector to invest.
What would you all say are the top 2 challenges impacting your hub today?
Cost of engineers.
Engineering costs, okay.
And innovation tourists.
So innovation tourism is when senior execs from X company would like to come to the startup petting zoo and just see startups, to see what they look like, what they talk like, how they dress, etc. But they don't necessarily want to do any business with them. And doing business is exactly what a startup is about.
There's always a need. We have companies in our lab that have grown, and part of growing is hiring the right people. And I think that becomes a challenge regardless of what hub you're in. And I think that's being solved slowly in various regions, and with universities building out programs, with the right kind of training happening to solve that. And then the other thing, obviously, putting on the enterprise hat, the time it takes for a startup to kind of engage with a large financial institution and get to a signed contract is probably still longer than we'd want it to be. Sure. And so part of the lab is to kind of shorten that process. And how short can you get it? That's a question that Mike and I were talking about. I think, typically it's been 18 months or longer, and I think with the lab and some of the other initiatives that various organizations have started, you've gotten down to a few months. Now, can you get that even shorter? I don't know. That's a question we'll have to find out in the next couple of years.